Good morning, team. Happy Friday. Keep in mind that Monday is a holiday, so the markets are closed on Monday. So there is no stock market on Monday. And like I said, I'm going to be out of town for the weekend, so no video on Monday and no video on Tuesday because I will be at Disney with my girls, as I mentioned before. So the reason why also I sold a little bit more premium yesterday than maybe I should have, not should have, but maybe that normally I would have, is because since we're off on Monday, that's one extra day that we have of time decay on our premium. So a little bit more money we could make while the market is closed. So that's kind of a little strategic add-on I did. Now, yesterday, the NASDAQ, look how funny it came right to the trend line. This trend line here from this higher lows. Now, the good thing is it's a higher low. So this is a positive sign. Again, we still need to come up above here. The 50 is about to break the 200, which is, this is called the death cross if it goes below that. So we can go lower if that happens. But if we kind of maintain somewhere around here, and then kind of build our way back up again, this can maybe stabilize and we can kind of have some kind of resolution here to the upside. But we're not going to predict. We're going to watch it day by day. Yesterday we put on some premiums. Why? Because we had this huge, ugly down day. The VIX was really, really high, and we were able to take advantage of that. This morning, the futures looked like they're up about 100 points. You know, right now as I'm making this video, it's 91 points, which is good. I mean, as long as we have a flat to up day, what we have in our portfolio right now should make us really good money today. So we made some decent money yesterday. Today it should be a nice profitable day. Yeah, even if we don't have a huge up day, just because of time decay and the volatility index, the VIX going a little bit lower. Right now, pre-market, the VIX is down about $1.32, which that means the premiums and the options are going to shrink. They're going to go down. That means it's profitable for us because we sold them higher and we can buy them back lower. That's kind of the game plan. If you watch my my educational video on premium selling, that's kind of one of the key things. Volatility crush, we make money, and time decay, we make money, as well as the positive movement of the stock going our way. So my watch list today is pretty narrow. I mean, we don't have that much going on in the market, and also, again, it's a long weekend, so you don't want to be too exposed, but we still want to take advantage if something works out. So I'm looking at I'm going back to the well on CNQ here because it looks like it's setting up again. I'm looking at CNQ, taking off the stops here. If we break above 54.75, I'm a buyer. So if we have an up market, if the market is positive, we're in the green, we are going up in the market, and these things set up and break out, we buy. If we have a down day, and even if these things break up, the probabilities of them sticking and trending higher diminish drastically if we have a down day. So always have the win at your back. The win is the market. So 3 out of 4 stocks, go with the market. So if the overall market is down, you don't want to be getting too exposed long, even if you have a breakout, because most of the time they're going to fail and they're going to come back inside the breakout. If we have a good trending market, they'll work. Something like this here, where you broke the 44, you buy here, that's a nice 10-point move. So that's kind of what we're looking for. Right here, we broke this little shelf right here, boom, we took off. This is about 35, let's say, to 41. That's what we're looking for. Okay, so if we break here, we get in. So CNQ 54.75. The stop will be somewhere below the 21-day moving average. This green line. If we break this kind of little shelf here, we get out. So that's CNQ. The next one I'm looking at, AR, Alex Rodriguez. I like it. AR, I'm looking at 2140, which is kind of this little shelf right here. If we break 2140, we could possibly take out 22. This is a slower moving stock. It's not going to move out 3 or 4 points in a day, so it's a little bit more conservative. So that's why I'm taking a little earlier entry. And the stop is way down here, maybe like at 18. So you have a 3-point move, a 3-point cushion here. So it kind of wiggles around a little bit. It's an aggressive entry, but look at these numbers: 40% increase, 83% increase in sales, 280% in earnings, 1,000% in earnings. Look at this growth right here, from almost negative to flat to 144 last year, 313 and 310. You know, number 5 industry group, oil and gas. So again, something like this, you know, if once it broke right here, you know, you took it from like 1560 to like 21. That's a nice move. Even here, you took it from 11 all the way to 15. That's a nice move on a low dollar stock. You can kind of pile up here. So again, that's what I'm looking for. AR 2140. PXD. We made really good money on PXD. Really good money. This is a nice little. I have my alert right here. You see it? Took it right here. Took it all the way up to like around 225, around there, from, you know, a 195 entry around there. That was a good move. Again, a little wiggly. So it's building a nice little shelf here. Let me look at the weekly. See, it's kind of building a nice little shelf here at 230. So I'm looking at PXD 230.77. PXD 230.77. If it breaks that, I'm a buyer. Stop will be below the 21 right here. Okay. Again, this one goes small. Again, great numbers. I mean, 158% increase, 133, 1,000%, 300%. Look at this growth from, you know, 8.6 to then 13, 21, 20. Again, industry group, 5th industry group, oil and gas. It's working. Great stock. Another base right here. If you would have taken it at 176, you took it 20 points to 196. This one right here, I took this trade. This is my earlier alert. I took it right here around 197, and I took it all the way up here. Once it broke the 21, I got out. So I probably made about 15, 17, 18 points right here. That was a good move. So I'm letting it set up again. Again, I had no entry right here because it was kind of wobbling around, and then it's putting another little shelf. So PXD 230.77, small. Okay, a quarter position, maybe a 35% position, but not too big, because again, the market is choppy. We don't want to be aggressive here. So, but it's a good entry if we have a nice up market. And then the last one is EC. I'm looking at EC. Same thing, oil and gas. Great numbers, 195, 228, increasing 131%, 90%. Last quarter was 345%. If we were to take, you know, this one right, let's say you would have taken this one. It's a good lesson right here. You would have taken it right here, right? Then you would have stopped out. So this is 1535. You would have probably gotten stopped out at 15, you know, 20, or let's say 1498. You would have lost 40 cents. That's why we have stops under the line. So once it breaks it, we get in. Well, where's our stop? Right below. So something like this, we probably would have taken profit somewhere around here when it kind of turned around and broke this right here. So that's how you trade these breakouts. Right here, I wouldn't have bought this gap up because it's a gap up. I let it come back in again, and then once it comes back up, I probably would have bought it right here, and I most likely would have maybe got stopped out here. So it would have gotten me out a couple times. So I'm looking at EC at 1550. If we break out, you know, somewhere about this high right here, 1550, it could take off. If not, I'm getting out right here. This is probably about 1450, so I'm giving it about $1.25 to shake me out. Again, if it breaks out and it comes back inside right here, I'm getting out. So I'm only buying it if it's kind of trending and then it stays above the line. Above the line is good, below the line is bad. Very simple trading, guys. Above is good, below is bad. If this, then that. If it breaks, I'm buying. Then if it keeps on going, I'm raising my stop. If it goes below the line, then I'm out. Very simple. No stress, no drama, no emotion. Very simple logical trading. Okay? Let's keep it very simple. So that's pretty much it. I mean, I don't want to get too exposed on a long weekend and with the market so choppy. But so far we are looking pretty good. I mean, we're looking at a good start right now for the day. So our short premiums that we sold yesterday should work pretty nicely today. So if you took any of those, good job. I might not take profits on most of them today, just because, again, Monday is a holiday, market is closed. So I want to pick up an extra day of time decay to give me a little bit more premium advantage. So I might take off, maybe 25%, but I might not be too aggressive taking out too much, just because of letting it work a little bit longer. Because we have a long weekend, it's kind of collecting free money for the extra 3-day weekend. The NASDAQ, the Qs, again, we broke below this lower level trend line. If you notice that the Qs a little bit more aggressively going down, so we need to stabilize here. We can't take off this low. We kind of almost took out this low, so we're still technically higher lows, technically. So we gotta keep it above here, and then it's a good sign. And then again, once we break here, we resume this kind of puppy where we make our good money. Okay? Be safe today. If you have any questions, I am here. Thank you.